What's going on? Billy here from Storm Trades with another trade recap. Today we're going to run through my first 6E, that's Euro futures. My first trade I took live on my funded accounts on Thursday, July 24th for a sweet little 1.5R win during the New York AM trading session. I have been back testing and forward testing 6E for a few weeks now, and today I decided to take a shot. We had time frame alignment and a clear daily, clear bullish daily bias, and we had a clear draw on liquidity in the form of equal highs. Let's get right after it. On the chart right now is the last 5 daily candles, right? So whenever I'm reviewing or analyzing the daily chart in order to get a bias, I want the chart to be extremely clear and easy to read. And well, this, to me, this certainly is, right? So what we've had here is an extreme bullish really the last week. Okay, and you could see that based upon these large bullish candles and how they've been closing over the previous days. All right. Now I set up my daily chart the same way every single day. I'm going to do that right here. First things first, I like to mark off the previous daily low and the previous daily high. Okay. I want to run a fib from the previous daily candle, and we'll get into why T-Trades teaches that in a few minutes. Now, as I'm watching price here, right, I just want to make note that on these days prior, we had strong closes above the previous daily high. Okay, that's an indication that price wants to continue higher. We had that in the last 3 days, right? We had a strong bullish candle close over the high of the previous day. Now, we always want to make note of external range liquidity and internal range liquidity, and we want to see what price did when we hit that liquidity. So we had a swing high that we closed extremely bullish through, right? Like if we would have expected price to move lower from the swing high, we would have seen a wick form and then maybe a close back into the range, but we didn't. We had a very strong bullish candle close through not only the previous day but the swing high. So that's an indication of very strong price action. And we had another swing high here that we thought we may get a reversal from, but instead yesterday we closed extremely bullish above it. All of this is an indication, okay, that price is moving higher. Now, let's up here we have a swing high just to sort of as a target, right? We're always looking for imbalances and swing points to target for a form of liquidity. And I also just wanted to make note, right? So if we're in a bullish environment, we would want to see the midpoint of each previous daily candle hold price, just like we're going to be wanting to see here today. So I'm just going to go and just mark off the midpoints of the last few days. And if you notice, we dip in, we expand away. In this particular case, we dipped into the upper quadrant barely, expanded away. Yesterday, we dipped down, okay, swept the midpoint, traded away. So today, what we would be expecting, right, is we'd be expecting this candle right here, this is in the morning, that this would actually be forming a wick, and then we would be trading away. So I'm going to mark off this little shaded area here. If price is going to continue higher, we're going to see a wick form here, and we're going to expand away, perhaps ultimately targeting this swing high, right? So it's very clear to me today, this morning, when I'm reviewing this, that I have a bullish bias, okay? I don't know how you could read price any differently on the daily. Some people probably could. That's fine. And maybe they caught this over London in an early morning. Perfect. I am bullish. So moving on to the hourly chart. Pull that up. Now, I just want to show you something here. The hourly chart is showing clear bullish activity. After last Thursday, we made a smart money reversal, and look at this low resistance liquidity here. This is a perfect example of a market maker buy model. It is clear that this is the left part of the curve, and this is the buy side or the right side of the curve. I'm expecting price to continue to come up and take out all of this liquidity. So when you look at it like this, it is pretty clear, right? And this is an indication of what we just looked at on the daily bias, right? All of these strong closes indicate a higher high, higher low, higher high, higher low, higher high, higher low. And now we've retraced a little bit here. Now, everybody knows who watches these videos on the hourly time frame. I am looking for the most recent change in the state of delivery. Okay, and we have that actually right here. Okay, so Wednesday we had a dip down into this hourly fair value gap, and then we expanded away, right? That was an indication the price wanted to go higher, and it did. Now we have come down and retraced, and we're testing that change in the state of delivery once again. And by the way, whenever I can get a clear change in state of delivery, I want to run a fib and just sort of see where price could potentially go, and if what's happening currently makes sense. Well, we know that retracements typically will happen at the low-hanging fruit, -1 to -1.5 standard deviation. So we came up into that, and now we're retracing. Now, I also want to mark off the ADR levels and sort of see how much room we have. Now, everyone who watches my videos knows that I love to form reversals off of the 1/3 ADR, and then I like to use the 1/3 ADR as a draw on liquidity. Now, if you look, the -2 to -2.5 standard deviation is lining up really nice with the 1/3 ADR. Okay, so I'm going to assume that that's going to be a nice draw on liquidity. And look what we've done this morning. We've also come down here, and if we're going to have a reversal, I'd like to see it form at the 1/3 ADR, right? So we've dipped down into the change in state of delivery. If this holds and we start to reverse from here, right, which is what I'm expecting, then price should come up and attack the highs. If we came down and started closing below the midpoint, right, the midpoint here, we started closing below this, I would now start to consider that we're wrong on the hourly market structure, and price could start to dump. But I had a good feeling. Feeling is not really the right word, but I like the confluence between the high time frame market structure and the daily bias, right? So with this move into the change of state of delivery, and this is at the end of the 8 o'clock candle, I moved down to the M5 time frame and started looking for reversal pattern to get involved, right? So let's move down to the M5. Now, on the M5, the first thing that jumps out at me, besides the fact that we've just swept the 1/3 ADR, as we previously said, is we're looking at it for any clear draws on liquidity. Well, what do we have up here? It's really important, right? So up here we have the Asia high and the Asia high and the London high, extremely close to each other. But in fact, London did not take Asia out. This leaves behind relatively equal highs. This is a really important thing because that's a nice draw on liquidity. And if we see a move back up into the range, okay, with some displacement, I would expect those highs to be taken. Now, we still have the 1/3 ADR up here, right? So to me, all that means is I don't need to go to the 1/3 ADR. I just need to know that we may be reversing off of it here and that we have a lot of room, right? Meaning that we could easily come up and attack this relatively equal high right here between Asia and London. All right. Now, we already have our sweep, right? We have a sweep of an hourly swing low here, which is what we need in order to start hunting for bullish action, right? We either need a sweep of some sort of a hourly swing point or an hourly bullish fair value gap. Now, I'm going to mark off these series of down close candles as a change in the state of delivery, and I'll be watching for price to come up, close above that with some sort of displacement prior to getting involved. I also want to make note that right here we have this up close, these series of up close candles prior to the move down that took the liquidity would be a breaker. So I'd like to see a move up through the change of state of delivery and confirm the breaker prior to getting involved. In fact, that's exactly what I did. So let's watch price. You're going to see what is considered a real displacement move, right? That is a displacement candle. That is a signature in price and we have in fact started to reverse. And if we can get through this change in the state of delivery and the breaker, it looks like we'd be forming a unicorn. A unicorn is a fair value gap and overlaps with a breaker block, right? And what you need for a unicorn is that you need a high, a low, and a higher high, and then we would test it. All right, on the next candle, we have now confirmed a fair value gap right there. Okay, that overlaps with the breaker. We have not closed through the breaker yet. On this very next candle, we do. Right now, I'm going to set a, and I did set a limit order here, and I did a stop below the midpoint of this fair value gap. I could have easily done a stop right here, okay? But I just wanted to be a little more conservative, and I looked just for about 1.5 R, and I had a little bit more of a larger stop there because of this large unmitigated portion of the fair value gap. Anyway, so let's watch price here. We moved up already, but then we came down on this very next candle right here. Oh, here we tapped in and started moving away. And boom, we got a nice win. And here is my execution. Right, okay, this is, I posted this live in the Unicorn University Discord. Okay, and that was it. That's the trade for 6E, first ever 6E trade. I've just been really liking the price action recently. I have a philosophy that each pair has its time to shine throughout the year, right? There's some seasonality between all of the pairs, right? Whether it's gold or oil, indices, and in this case, Euro futures. So you guys have a great day. If anybody watched this video, I really appreciate it. Smash a like, throw a comment, and I really appreciate anybody who is willing to follow. So you guys have a great day, and happy trading.